Our next guest is making some positioning changes, downgrading energy, for example, to underweight, taking global tech back up to overweight, calling this an attractive entry point for the sector. Joining us at Post 9 Citi's U.S. equity strategist Scott Chronert is back, and with a great note. There's tons in there. I guess tech is that the lead? Would you say?
I think it's the lead. We upgraded tech to an overweight in U.S. over this past weekend. We then followed up with a global call overnight, and essentially the global tech call is mostly a U.S. call. But there, we got the pullback we were looking for, Carl, in terms of the move lower off of the past couple of months. What that did was reset some of the valuations. Interestingly, while the sector has gotten quite oversold, the fundamentals have been very consistently up and to the right in terms of earnings growth expectations. So we think we're in pretty good shape. And then we have sort of a debt kicker, if you will. And that very simply is that the tech sector in general, growth more broadly, carries very low debt levels versus the defensive and cyclical parts of the market, and very high cash relative to debt. So if you're looking for a way to counter some of the rising rate influence, tech is it. Last part. If you're thinking about extending duration in a portfolio, you can do it by going out the treasury curve. In equities, you can do it by going out the duration curve via tech.
Right. Where, as you said, it's a little more reliability on earnings and cash levels. I guess that's why the Dow's best names of the year remain all tech-based.
I mean, we can talk about valuation. Again, we think we got to reset. We're not giving away the valuations on tech, but we're much lower than we were. Heck, we did this note on the U.S. side. We looked at the Russell 1000 growth, and we talked about the index, but you literally had 20% of the constituents in that index that are down 20% or more. So essentially, there's a lot more carnage in this growth space under the surface. That's where we're looking to capitalize. Tech is the most clear manifestation of that.
But do you still like overseas markets better than the U.S.?
Well, what happens if you kick the can on recession timing and you increase the chances of soft landing, then essentially you set up for a little bit of an economic rally. And when you go economic sensitive, you're at the margin going to favor sort of rest of the world versus U.S. So that's the way we're playing it going into Q4. But it doesn't negate, I think, the view that we think on tech, which is a way to think about getting defensive here even as economic risks continue. Essentially, this growth is defensive theme we think plays out, and it's being augmented by the fact that your defensives, as you were discussing earlier, can't get out of their own way right now.
Don't you need lower yields for that to work?
Well, so we need to get at least to where we're looking at a peaking 10-year, and I think we're approaching that level, and that's where we're getting the courage of our conviction.
The underweight on UK and the underweight on energy kind of does point to what I guess you're saying is a soft global macro view in-house, yeah?
You've had a big move in oil prices. Our commodity research team at Morrison Company, they've been arguing that we're seeing a peaking in oil prices and can probably move lower from here. So we're taking advantage of that move higher in the energy complex to take a step back.
And what explains the UK as well?
So the UK is going to be a little bit different. I mean, we know that they have their own sort of recession circumstance, their own fiscal circumstance. There, the preference is at the margin for the continent over the UK itself.
Hopping in and out of these overweights quarter to quarter, would you describe these as tactical moves, or is this a strategic move?
It's a quarterly call, but you hope you do it with a little bit longer shelf life. The inputs change, and you have to respond to that. And so, right now it's kind of saying from a U.S. lens, we're kind of pretty comfortable shifting back to this growth focus. Again, on this growth is defensive theme. When you play it globally, there aren't that many places to go for major tech exposure outside the U.S. So we're playing both sides of it.